Buying a home is exciting, but one wrong move can put your mortgage and your dream home at risk. Today, we're breaking down the 10 most common and costly mistakes homebuyers make so you can avoid them and keep your home purchase on track. If you're new to this podcast, please like, subscribe, and share with someone who could benefit from this helpful information. Have you ever heard of someone getting their dream home under contract only to lose it because of one simple mistake? It happens all the time, but not to you if you know what to avoid. Let's dive into the biggest home buying missteps and how to steer clear of them. I'm here with Lindsay from Morgan Financial. How you doing, Lindsay?
I'm good. How are you, Joe?
I'm good. This is cool. I like this one because these are what we call them the 10 commandments of buying a home.
Yes.
And it's not meant to be blasphemous. Like
right.
This is not the word of God by any stretch of the imagination.
No, it's just to get you to remember the things that you should not do before purchasing a home, right?
Right. The things you should do and not do to avoid, because no one wants to get down the track of buying a house only, they qualify and only to have things go awry at the last minute.
Right.
Yep. So which one's first?
We can start with number one.
That's a good place to start, the beginning.
The first one that we have on our list here is changing jobs or income sources.
Right. So when we qualify people, typically people get pre-approved. That's the right way to do it. But typically people go, they find a lender, they get pre-approved, then they go shopping for the home. And so when we pre-approve people, we actually underwrite them to the guidelines. And so we're going to look at the income that, the income, assets, and credit, but the income based on the current job that you have.
Yeah.
And so sometimes people, in the middle of the transaction will say, well, I got a new job. You're like, oh my God.
Had that happen before?
Yeah. And so if they change jobs, maybe the income's the same, but maybe they switch from being a W-2 employee to being a 1099 employee. And that would cause problems in their loan approval.
Sure.
So if you do switch jobs, that could certainly be a problem for your approval. Even though if you've been pre-approved, you still have to have that same information at closing. So if you change jobs, we're going to have to do a new verification of employment. We're going to want to see pay stubs. We're going to see if there's a contract involved. We want to see that contract. So you almost have to get approved for that loan.
Yeah, start all over.
Yep.
So the second one, this one hits home. I was at a closing last week where somebody had mentioned going car shopping.
Oh, God.
Right before the purchase. Thankfully, they didn't pull the trigger, but making big purchases like cars.
Well, the one I can think of that comes to my head is I always tell, when I was a loan officer, I told people, if you're going to make any major financial decisions, I'm not saying you can't do it, but certainly talk to me before you do, especially if you're under contract in the process. And I had a borrower, I'll never forget, I remember his name, I'm not going to say it, great guy, really smart dude. He was a Air Force guy, captain, he was a civilian, but he was, that's not the point of the story. The point is that he and his wife were shopping for RVs.
Yeah.
And they were on an RV lot. And this was a long time ago. We're talking like 2011 when it was very difficult to sell an RV.
Right.
And he calls me, he goes, look, Joe, my wife and I found this RV. It's like the perfect RV for us. We weren't planning on making it because I know we're buying a house. But he's like, can I buy this RV? I go, look, I'm not saying you can't. How much is the payment going to be?
Yeah.
And he's like, well, here's the deal, Joe. If I don't buy it this weekend, he said the deal isn't going to last the weekend. And I'm like, dude, there's no one buying RVs right now.
Right. Sounds like every other salesman on the RV
take
lot.
Your time. But this was 2011 when no one was buying RVs.
Yeah.
But he told me the payment was going to be like $961. That number just stuck in my head forever. And I ran the numbers. I go, hey, look, is your wife there? He goes, what do you mean? Is your wife there? Just so I can give you this news together. He's like, yeah, she's right next to me. I go, okay, tell her that that's a great RV, but if you buy it, you're going to be living in it.
Do you want that more than your house?
Do you want that more than the house? And it's because that pushed his debt to income limit way over the limit. So that major purchase would have affected him buying the house. And had he made it and not called me, thankfully he did. And I answered on a weekend, or it might have been a Friday. It doesn't matter. But the point is that if you buy major purchases, it could affect your debt to income. It could affect your cash to close and other things like that. So you definitely, if you're in the loan process, even after pre-approval, you're not approved yet until the loan closes. And typically they do last minute checks. The underwriters, the lender, does last minute checks to make sure you're still approvable.
Gotcha. So that brings us to number 3, maxing out your credit cards.
Yep. So this
I see the pain in your eyes on this one, Joe.
Every single one of these comes from a point of pain. And I want to save these people that pain because I don't want them to fall to any of these problems. So one of these, maxing out credit cards, well, that could disrupt your debt to income. So people are like, well, they already pulled my credit, so I should be good. Now I'm going to spend my money on my credit card and save my cash and use that for my down payment and closing costs. And the problem is that within 10 days of closing, per Fannie Mae guidelines or Freddie Mac, we have to do a last minute check. And if you've run up credit cards, well, that's going to hurt. That could very well hurt your ability to get that loan because it might throw you out of whack on your debt versus your income.
Yeah.
So definitely don't go out and max out credit cards. Now, if you have a need, make sure you have a good line of communication with your loan officer. Ask them, how is this going to affect my approval? My AC unit just died. I need to replace my AC unit. I need to put something on my credit card. How is that going to affect me? Have that good open dialogue with your loan officer, but don't do anything without understanding how it's going to affect your approval process.
Yeah. A lot of these, it seems to come back to communication. As long as you can communicate with your lender, you
very
can
important.
Come up with some solutions there.
And if your lender doesn't answer, if it's a big box lender, they might not be there for you when you need them. And that's a problem.
For sure. Number 4 is spending your closing funds.
I mean, this brings up so much pain. Every single one of these you've mentioned, I can tell you a very specific story about how we got burnt someone got burnt because they went out and, like this one, I remember the guy he got a gift from his parents ahead of time. He spent the money.
How did he plan on closing is my question.
Getting another gift? I don't know.
Yeah.
But he spent the money and he couldn't close, and that was kind of embarrassing. I'm like, I asked the same question. I didn't understand how someone could do that. They got a gift to use towards their closing costs, down payment, and prepaids, but it didn't happen. So if you spend your money for closing, you're going to have a hard time. You're not going to be able to close unless you can renegotiate the deal, restructure your mortgage somehow, and maybe get a seller concession or something, but that doesn't account for down payment. So you definitely don't want to spend the funds you've set aside for closing. That would be bad.
Yeah. Well, number 5, hiding debt or financial obligations. I feel like this is like the don't tell mom scenario.
They're like, well, maybe if I just don't talk about it, it will never come up.
Yeah.
It'll come up. It'll come up because
they always find out.
They always find out. You can't hide things. I mean, you're better off telling them up front and seeing if it's going to be a problem or not.
Sure. Versus
trying to hiding it, crossing your fingers, holding your breath, and hope it doesn't come up. Because lenders are pretty thorough this day and age, and the technology that we have to look at to find these things. It is immense. There's a lot of technology and a lot of reports we pull before we close to make sure we're not missing anything.
Sure. Are there any examples of things that people have tried to either hide or leave off that will often come up?
Yes. I mean, there's, if you had a bankruptcy, foreclosure, or short sale in a certain period in the past. And these are questions we ask on the loan application. And just because it didn't come up in the current credit report doesn't mean we're not going to find out about it. That's
just because you had one doesn't mean you can't get a loan.
Correct. That's the other thing is tell your lender up front, hey, listen, I had this, because we're going to find out at some point. It would save you a lot of time, money, and effort if you found out sooner than later. So make sure to have that open dialogue.
Yes.
But it might be a credit item that hasn't showed up. You might have bought a car right before we pulled credit, and maybe it doesn't show up. But the inquiry on your credit report will show up towards closing, and then we're going to ask a lot of questions, and we're going to find out the answers. And most lenders will.
Yeah. Number 6, financing new furniture.
Yeah, but Lindsay, it's a 0% interest payment, same as cash for 17 years.
Do you still owe that debt?
Yes.
Then it's still there.
So I get that a lot. It's like, look, I found this really great furniture, and they have it at one of the big furniture box stores, and it's a 0% interest. So what's the big deal? Well, you still owe money,
right?
And there's still a payment on that money, and that's still going to be factored in your debt to income. Please don't do this before closing unless, it's fully, but then we just need a bunch of paperwork for you.
Yeah.
So try to avoid creating new lines of credit, Don't try not to do that before closing. It's possible you can do it. And if you absolutely have to, talk it through with your loan officer to make sure it fits within the guidelines and it fits within your debt to income. Otherwise, it could be a last minute surprise that could cost you that dream home.
Well, you kind of just dabbled into number 7, applying for new credit.
Right. Don't do it.
So it's not just limited to cars or to furniture. It's new credit in general.
Right. So when you apply for credit, your credit's going to get pulled or run, and it's going to create what we call an inquiry. And we will get notified of said inquiry at some point during the transaction, and we're going to ask questions about it.
Yeah.
Now, and we're going to find out what happened. And so, and by lying or excluding it, you're effectively creating mortgage fraud, which you don't want to do.
Right.
So you want to be truthful, but I'm telling you now, make sure you have that open dialogue with your loan officer to discuss these things. And if you absolutely need the credit for one reason or another, again, talk it through, and it might be fine. And then we'll just have to document it. We're going to have to get documentation on the loans, what the credit is, how much it is, what the payment's going to look like, the term of it. And then if it works within the loan, there's no problem. It just creates more paperwork.
Right. Well, number 8 is kind of the inverse of this, or opposite of this one. It is making large deposits without documentation. So all the other ones were talking about spending money. This one's actually talking about putting money back into your bank account.
You think it's my account. Who cares if I put a big deposit in there? It's my account. It's my money.
It's more money.
Yeah. That should be good, right? And my favorite is when people say, I'm like, well, where did that money come from?
Yeah.
And they tell me, don't worry about that. It's good. Well, now I'm worried. Yeah. Now I'm real worried about it. Real worried. The reality is if there's a large payment that's been put in your bank account, and it's a bank account we're using, and we see that large deposit, not only do we have an obligation on the loan, but we have a financial, fiduciary responsibility per the FinCEN Banking Act to see where that money came from if it's a large transaction.
Correct.
As long as it can be documented and it's from an eligible source, or maybe you're not using it for the transaction, that might be okay, right? But if you're, like I had one where the woman, her uncle gave her $100,000 in cash.
Wow.
I'm using the term uncle. It might have been her parent. I don't remember. That he won in a poker tournament, right? Or maybe it was $10,000. I don't remember. It was a lot of money.
It's a lot of money.
And this was a long time ago. But I remember she's literally said, I'm like, can you document that? She's like, well, he gave it to me from his safe. I'm like, I don't know where that money came from.
Right.
We might have even had to report that because it was undocumentable funds. This was 10, 15 years ago. And so if you can't document the funds, that's going to be a problem. All right. It's a problem in banking. It's a problem for mortgages. And so we have to be able to source the funds. Now, if that large deposit is sourceable, that's a whole different story. Yeah. And if you're using it for down payment or for funds for closing and it's from an eligible source, that's fine. But we have to document it.
If you can't document it, don't do it.
Well, I can't tell people what to do and not do.
Right.
But make sure that you can document it. That definitely helps.
Gotcha. Number 9.
Oh, God.
Switching banks.
Like I said, every one of these gives me a mini heart attack. PTSD, mortgage PTSD. It's not as sinister as other forms of PTSD, I know, but this does, switching banks. Look, it's not that you can't do that. It's that it's going to cause a mountain of paperwork and issues, right? And so if you can wait to change banks or, do it well ahead of time, it certainly helps. But doing that in the middle of the process of buying a house is just going to create frustration for you, the borrower, and us, the lender, of trying to piece all this together.
Yeah. Number 10.
Oh, God.
Co-signing on a loan for someone else.
Yes, you're responsible for that payment in some way, shape, or form. And yes, I have to count that against your debt to income ratio unless you can prove the other person's been paying on it. If it's a non-contingent liability, if it's a contingent liability and someone else has been paying on it for a certain amount of time, and we can prove that with canceled checks or deposit or something, then we don't have to count it against you. But if you co-sign for somebody, then you're essentially
on the hook for it.
You're on the hook for it.
Yeah.
So it's going to affect your ability to get a loan, one way, shape, or form or another, or we might have to prove that you don't have to make that payment. But that gets a little dicey with the guidelines and whatnot.
Right.
So don't do it.
Well, that was all 10. There's the 10 commandments right there.
I think the bottom line here is that if you're doing something with your finances, your money, your job, your income, your credit, your cash to close, if any of these things you're messing with during the process and approval point, that you want to definitely have that open dialogue with your loan officer to have that conversation to see, is this going to cause me problems?
Yeah.
And if it is, should I wait? And if I can't wait, what do I do?
Yeah. Communicate.
Communication is the absolute key here. So
awesome. Well, I think you just saved people a lot of heartache in the future.
Hopefully. Thanks for watching. If you found any value in this, please do us a favor. Hit that like button right now. And if you're not a subscriber, go ahead and subscribe and hit the little bell notification so you get updates when we put these videos out weekly now. So that's all we got. Hope to see you again. Thanks, Lindsay.
Thanks for having me.
See you next time.